and welcome back to my channel. I'm Marie Mundy, realtor with House and Haven Realty. If you're thinking about buying your first home or you're currently renting and hoping to purchase a home within the next year, today's interview is for you. One of the biggest mistakes people make is waiting until they're ready to make an offer before speaking with a lender. Planning ahead can save you money, reduce stress, and help you make better financial decisions. Today, I'm joined by Julia Sharp with Sharp Mortgages. Julia has helped hundreds of families achieve home ownership, and she's going to be answering some of the most common questions for first-time buyers. Before we begin, I'd like to let everyone know that the information shared in this interview is for general education and information purposes only. It's intended to help viewers better understand the home buying process and mortgage process and should not be considered legal or tax, financial, or mortgage advice. Every buyer is unique, and the buyer should consult with a qualified professional, including their lender, attorney, accountant, or financial advisor regarding their specific circumstances before making any decisions. And please note that Sharp Mortgages is an affiliated business with House and Haven Realty. And while we're pleased to share educational information and work together to help our clients, you are under no obligation to use Sharp Mortgages or any of the affiliated service provider. You're free to choose your lender and service providers that best meet your needs. We hope you enjoy the interview and find it helpful as you prepare for your homeownership journey. Julia, thank you so much for joining me today.
Yeah.
Could you tell me a little bit and everyone about yourself and what you do with Sharp Mortgages?
Yeah, so I am a mortgage loan originator here at Sharp Mortgages, and I help people get pre-qualified to purchase a home or help them with a refinance or any type of mortgage related thing that they could need.
Oh, that's wonderful. Do you mind if I ask you a few questions for our audience?
Yeah.
I'm going to refer to my laptop so I don't miss any important facts. What would you say someone should start doing about a year before they plan to buy their first home?
Preparation is really important in buying a home, and if you have time to be able to do that, such as maybe a year before, I think it's really crucial to save as much as you can. Make sure that money is in the bank, not mattress money or money in the safe at home. You want to make sure it's deposited in your bank account that we can verify. It's really important to work on your credit. Have your credit score be as high as possible because you'll just have better options, better outcome altogether. And also to not make any big movements or changes with your employment. So if you're thinking maybe about starting your own business, you probably would want to do that later on, not right before buying a house because you won't have that history. So the main things are working on your credit, saving up as much as you can, keeping your employment, and making sure that there's no major change in the stability of your income.
Okay.
And if you work on all of those things, you should be on the right path to homeownership.
Oh, that sounds wonderful. Now, you did cover quite a few points, so I'm going to break down a couple of questions. So, number 2, what would you say is the biggest mistake a first-time homeowner buyer may make in that year they're planning?
The biggest mistake I see people make is buying a car right before closing, which a lot of people might think like this might not affect my qualifying numbers or open up a lot of new debt. That's something that a lot of people don't think about. If they go to the store and they offer you 20% off if you sign up for their credit card and you say yes, that's a new line of credit, which could negatively affect your mortgage qualification.
Oh, that's a great aspect.
Yeah. Yes. There's other things though, such as quitting your job, like I mentioned, getting self-employment income out of the blue, doing, things that are not traceable and that kind of could hurt your situation, such as adding new debt, spending a lot of your money, things like that. Another thing that I see a lot of people do or think that they have to have is 20% down to buy a house.
Okay.
And so being educated is the biggest thing you can do for yourself when you're buying a home, because there's so many options available out there and you just don't know what's available to you until you talk with professionals like us so that we can figure out exactly what you actually are able to do rather than just listening to the media that might be telling you you have to put 20% down.
Absolutely, that's a fantastic point. And What can buyers do to improve their chances of qualifying for the mortgage? Would that go back to some of the points that you just pointed out?
Yeah, like just keeping your credit score as high as possible, keeping your employment, saving up as much as you can. Those are all attributes that will strengthen somebody's application, and just not making any drastic changes to your financial situation is really important. And just having the conversation sooner rather than later with a lender like myself, so that you can be fully prepared and know exactly what you need to do in order to either get to the price point you want or to qualify later on for the price point you want. So it's important to have these conversations sooner rather than right when you want to buy, because then you have plenty of time to prepare and do anything that might make a positive impact on your home buying journey.
And going off of that, I know that a lot of our viewers may not be aware of different loan options that are available for first-time homeowners.
Yeah.
And what makes a person qualified as a first-time homeowner? Is there a certain amount of years between owning their previous home and buying their current home, or is it just people that have never owned a home before in their life?
That's a great question, and this is another misconception out there, is that a first-time home buyer can be anybody who has not been on title to a property within the last 3 years.
Oh, that's great.
And so, if, to your point, if you did maybe own a place 20 years ago and you sold it 15 years ago, you're a first-time home buyer again, just because you haven't been on title in the last 3 years.
Okay.
And so, main things for first-time home buyers that are really important to know is, on a conventional loan, you can put 3% down.
3% versus 20, which a lot of people think.
Yeah, exactly. A lot of
Okay.
people think 20%. If you're not a first-time home buyer on a conventional loan, you can put 5% down.
Oh, wow.
And that's for primary residences only. So if
Okay.
it's an investment property, it's different. But if you're looking to buy a home for you to live in, 3% for a first-time home buyer and 3.5% for FHA. And you can also not be a first-time home buyer to put 3.5% down on FHA, which is nice.
And when you say FHA, are you referring to a loan?
Yes, FHA is a government-backed loan by the
Okay.
Federal Housing Administration,
All right.
and those loans can do 3.5% down, and their primary purchases only.
Okay, that's wonderful news. And how much money should buyers realistically save before purchasing a home?
This is another commonly asked question, another really good question. I would always suggest, depending on, well, first off, I always suggest to have a conversation with me first so that I can actually tell you based on what you want, because it's a little bit of a broad category of saying you need 20 grand in your bank to be able to buy a house, because that person might want a $150,000 home, they might want a $500,000 home.
Right.
So the answer varies based on the buyer and what they're looking for.
Okay.
But if you were to say on any purchase price for a first-time home buyer, I would budget at least 3% for your down payment. So whatever purchase price you desire to be at, 3% of that number. And then I always say to budget anywhere from 3 to 3.5% for your closing costs and your prepaids. So if you add that up, I would suggest, based on whatever purchase price you want to be at, that would be a good number to try to keep a goal at. However, there are down payment assistance programs and closing cost assistance, so it really does vary depending on the buyer and their application.
Okay. So meet with a lender.
Yeah. Long story short.
And how does the credit score impact loan approval and interest rates?
Credit is like such a huge deal when it comes to getting a mortgage. Everything, typically, there is never really a time where credit doesn't matter. It is such a big scoring model that we use to qualify applicants. And so if you are looking to qualify for a conventional loan, you have to have at least a 620 score.
Okay.
And if you're looking to qualify for an FHA loan, typically it's around 580.
Okay.
For veterans, there is no specific credit score minimum. It just goes off of our automated underwriting approval system, and if that gives us an approval, then it's fine. However, there is a new credit score model that just recently came out, and it's called Vantage Score. And so your Vantage Score is another model that we can use if it's better than your FICO score. And so if the Vantage Score, basically when we run a credit report, we're now getting 3 scores on FICO and 3 scores on Vantage. And so we can go off of the middle of whichever one is better. And so there's more options. Basically, I've seen literally I have a file right now where the buyer had a 680 FICO, but their Vantage was a 730. That's a huge difference.
Yes.
And that's like actually changed the trajectory of their loan drastically.
Oh, wow.
And so there's a lot of credit guidelines that are becoming more flexible for buyers, which is really, really great.
That's awesome.
Yeah.
And besides a monthly mortgage payment, what additional monthly expenses should first-time homeowners plan for?
The main thing is HOA dues if you're looking to be in a homeowners association. I always would budget, you know, when you're looking with, like when buyers are looking with you, it's important for them to factor in if there's, you know, $500 HOA due. That's something that's going to be added in, you know, every month to their expenses. Outside of that, really, there's mortgage insurance if you're putting less than 20% down on a conventional loan. Higher the credit you have, the less it is. So again, having better credit is more ideal. FHA, it's just a percentage of your loan balance. And so other than your mortgage payment itself, which is principal, interest, and mortgage insurance, if applicable, the other two things are property taxes and homeowners insurance, and then HOA dues if it's in an HOA.
And can those all be rolled into one monthly payment for first-time homeowners?
Yeah, exactly. So you can either choose on conventional loans to have it be paid separately, or if you want it paid in your monthly payment. And then if you choose to pay it separately, you can only do that on a conventional loan. You can't do that on government loans.
Okay.
But yes, it is something that we qualify on as well. So we have to have those figures in order to qualify someone. We always estimate for taxes and insurance and all of what we do. And then if your HOA dues are paid separately to your association, they're not ever going to be paid through your mortgage because that goes to the association company that manages, you know, your property. And so, yeah.
All right, that's excellent. Thank you. And let's see, what documents should buyers have ready when they're applying for a mortgage?
So important documents, if you're self-employed, are going to be 2 years of your personal tax returns and 2 years of business returns. If you do have an S corp or some type of entity where you have a business tax return. For just regular employees, your W-2 employee, let's say, I would need the last 30 days of your pay stubs, the last 2 years of your W-2s, 2 months of bank statements for anybody, and then 2 forms of IDs, which can be your driver's license, social security card, or your passport.
And how long does the pre-approval process typically take?
The pre-approval process can be very quick if you as the buyer are able to supply me with everything I need to verify your income, your assets, and do all the necessary checks to make sure that you're golden. It can be less than a day. It can be, it can be very quick if I have cooperation on the other side to get me all the things I need.
So it's up to us, the person that's being the first-time homeowner, to get all our documents to you as soon as possible.
As soon as possible, right? And by doing that, we have an online application, and buyers are welcome to go on our website on sharpmortgages.com and fill out the application, or they can call me and I can guide them through it over the phone. And then at the end of the application, there's an auto-generated list that tells you everything I'm going to need. And then you can securely upload it to my portal. That way I get it as soon as you submit your application. I can review it, go over it with you, and then at that point, depending on the buyer's timeline, if a buyer tells me I just want to do a consultation and just see where I stand, I'm not looking to go buy tomorrow, I just want to look and prep myself for a year down the road, I wouldn't run credit at that point. I would only run credit as it gets closer. So if a buyer tells me, hey, I'm ready to go house hunting with Marie, I want to go get, you know, offers submitted and all of that, that's when we would run credit. So a lot of people ask that if filling out the application automatically runs your credit.
And is that a hard credit check?
It is. Once you do get down to needing a pre-approval letter, it is a hard credit check. But once we have that, we're good throughout the transaction as long as it closes within 120 days roughly of us running your credit.
So overall, it's pretty streamlined.
Yeah.
Okay, wonderful.
Totally.
And then one more question. Is there anything we didn't discuss today that you think a first-time home owner buyer should know before starting the process?
I think the number one thing people need to know is that it's not so scary and that it actually can be made easy and actually kind of fun.
Yes.
I think buying a home is one of the biggest things that our younger generation can do to help build wealth, long term. And I think that with the right team, it's a really enjoyable experience. And I think that there can be a negative connotation around getting pre-approved and doing all these things. But we at Start Mortgages and House and Haven do a great job at making that a pleasurable experience so that they want to go buy another house.
Absolutely.
And they want to be excited about it. So I think the number one thing is just breaking that stigma of being nervous to talk with myself about your pre-approval and where you stand, because a lot of people do have that fear that I don't want to have that conversation yet because I'm nervous.
Right.
And there is no harm to doing that. All you're doing for yourself is really preparing yourself and getting ahead of the game by having these conversations and getting all of your ducks in a row sooner rather than later. So I think if that's the number one thing that I would advise people to do is just to have these conversations sooner with real estate experts like us so that you can feel prepared, educated, and you're not frantic and misinformed or uninformed because you didn't take the time to get pre-approved before starting to go look at houses. Because a lot of people think that whenever you find a house and you love it and you want it, that's when you should get pre-approved, but it's actually the other way around. It's better to get pre-approved, know exactly where you stand, your estimated monthly payments at certain price points. You have all of that covered, so there's a lot less of a headache when you do find a house because you're so well informed before you even step foot in the property of my estimated payment is going to be X, my estimated cash to close is going to be X, I know how much I need as a down payment, I know I can afford this. All of those things help a buyer just feel more relaxed when they're going and falling in love with a certain house. They don't have to scramble last minute and realize that maybe it doesn't work or maybe it does work, but it's way different than they imagined the numbers to land. So I think just being informed, getting educated, reaching out to professionals, that's the biggest thing I think that you can do for yourself as a first time buyer.
So preparation is key, and talking to us is at no cost.
Yes.
So, okay, Julie, I want to thank you so much for sharing your knowledge and expertise today. I truly appreciate you taking the time to educate our future homeowners. And then I will take it from here. Thank you so much.
Of course. Thanks for having me.
Bye. For everyone watching, remember that buying a home is one of the biggest investments you'll ever make, and planning ahead can make the process much smoother. If you're thinking about buying a home within the next year, I would love to help create a game plan that fits your goals and timeline. Whether you need guidance from preparing financially, understanding the home buying process, or finding the right home, I'm here to help. If you enjoyed this interview, please like this video, subscribe to the channel, and leave your questions in the comments below. I will continue creating videos designed to help you become a confident and informed home buyer. Thank you so much for watching, and I look forward to seeing you in the next video.